conference call. Please an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Narayanan. Thank you, and over to you, sir.
Thank you, Margaret. Hello, everyone. Welcome to Zee Entertainment's Q3FY22 earnings discussion. We have with us today our MD CEO, Mr. Punit Goenka, along with senior management team of Zee. We will start with brief statement from Mr. Goenka, followed by a statement on operating and financial performance by Mr. Gupta. We will subsequently open the floor for question and answer. I would also like to remind everyone that anything we say during the call that refers to our outlook for future is a forward-looking statement and must be taken in consideration or the risk we face. We will now begin. Thank you, and over to you, Punit.
Thank you, Narayan. Good evening, everyone. Thank you for joining us today. I hope you and your loved ones are staying safe and taking good care. Before we speak about the company's performance during the quarter, I would like to apprise you on the progress on the merger front. Further to the definitive agreements inked between the two companies on 22nd December 2021, the teams are working towards completing all the necessary processes in accordance with the law. In fact, you must have noted the key documents pertaining to the scheme of arrangements between the two entities have been shared with the stock exchanges. That said, it remains business as usual, and both the companies continue to function independently until we receive the regulatory approvals, including the approval from the Competition Commission of India. As always, our CFO Rohit Gupta will take you through the financial and operational performance of the company. But prior to that, let me share a quick overview of how this quarter shaped up for us and the industry at large. Prior to the third wave, which we all recently experienced, Q3 augured relatively well for the media and entertainment sector due to the reopening of business and leisure activities. An improvement in the advertiser spending and consumer sentiments during the quarter led to a significant boost in demand, and we see this trend continuing as we move forward. That said, if you compare the growth witnessed in the previous fiscal in terms of advertising revenue from the second quarter to the third, with the one experience in the current fiscal, you will see that it is relatively lesser. One must note that in the previous fiscal, the recovery was from a nationwide lockdown, unlike this time, resulting into a huge pent-up demand. On the subscription revenue, the embargo on pricing has significantly impacted the overall growth across the industry. With the NTO 2.0 implementation being pushed to the next fiscal, it is still early to predict how FY23 will look. We will see some changes for a quarter or two in the next fiscal, and we'll factor it in our plans for FY2023. As I have highlighted previously, we continue to make significant investments across our businesses, shaping them to win in a highly competitive market. This is a market that is increasingly witnessing quality content and superior viewing experience being delivered to the consumers. Having experienced the disruptions in content creation caused due to the various restrictions and lockdowns, our teams are now better prepared and have been consistently serving original content to consumers. As a result, there have been significant investments in content this fiscal, which in turn reflect in our margins in the short term. This is in line with the overall content strategy implemented across various geographies. As we recalibrate and continue to launch new shows across markets to drive viewership share on the linear side, our digital business is posting strong growth across user metrics. ZEE5 has been growing sequentially over the last year, both on monthly active users and daily active users, and it continues to surpass our expectations. The platform posted robust growth during the quarter, and for the first time we have crossed 100 million monthly active users, which is a great testament to the investments made and the efforts thrown in by the teams. The watch time on the platform has also significantly improved to cross 200 minutes on the back of a compelling slate of content launched during the quarter and overall enhancements in the user experience. Going forward, our aim is to build into this positive momentum across all aspects by offering the best return on the consumer's investment of time and money. The only way we will achieve this is by investing appropriately across content and technology to ensure scalability all, there were pandemic-induced headwinds faced by the movies business, but the partial reopening of theaters across the country and the release of big-ticket films augured well for the industry at large. Our studios business has a very strong pipeline of films across languages for the year ahead, and we are hopeful that the third wave of the pandemic will subside soon, encouraging consumers to return to the big screens. That said, we have noted the overall sentiment and underlying trends of recovery in theatrical revenues, and we remain hopeful of an improvement in the subsequent few quarters. The third wave and the surge of infections at the start of 2022 could potentially have an impact on the fourth quarter, although it is still quite early to predict the outcome. The faster rate of recovery during this wave assures a quick resumption of services and activities across markets. We remain hopeful that we will end this financial year posting steady growth across all aspects of the business. On that note, I'd like to hand over the session to Rohit, who will take you through the financial and operational performance of the company. I look forward to interacting with all of you during the Q&A session. Thank you. Over to you, Rohit.
Thank you, Puneet. Hope all of you are doing well and taking good care of yourselves. This new wave of COVID-19 took us by surprise when things were starting to normalize. Disruption caused by COVID is impacting all businesses, especially studio and advertising business. As Puneet mentioned, merger process has been initiated post the board approval in December. In line with the prescribed process for the scheme of arrangement, we expect to apply to NCLT after receiving the necessary approvals from the stock exchanges in Q4 FY22, following which NCLT will call for a shareholders meeting for approval of the scheme in due course. Companies will seek other approvals for the scheme, including the approval from CCI in parallel. Investor requisition matter continues to remain sub judice, and we will not be able to comment anything further on this. During the quarter, we continue to be India's strong number 2 TV entertainment network. The viewership share for the quarter decreased by 40 BPS to 17.3%. During the quarter, we launched 25 plus shows across markets. We saw share gain in Zee TV, Bangla and Kannada market. While the performance in markets like Bangla, Telugu, Kannada, Odia continues to be strong, in Hindi, Tamil and Marathi markets, our share would improve further based on compelling new launches planned in Q4. We will continue to launch new shows across markets to drive share gain. Z5 strategy outlined in previous quarters is well on track, and we have started seeing robust growth in operating as well as financial metrics. For the first time, our global MAUs crossed 100 million mark. MAUs and DAUs as on December stand at 101.9 million and 9.6 million respectively, with watch time of 201 minutes. This is 15 minutes more than last quarter. This strongly affirms our investments in content and technology, which will further strengthen the business. During the quarter, we released 51 shows and movies, including 11 originals. We have a compelling slate of content lined up in Q4. We expect healthy growth to continue in digital. During the quarter, Z5 clocked revenue of rupees 1459 million, up YOY 24%. EBITDA losses for the quarter stand at 1828 million. During the quarter, Zee Studios released 5 movies, 1 Hindi and 4 regional, and we saw encouraging response in the states we were allowed to release. We have a strong pipeline of movies under different stages of production. We will continue to assess the impact of COVID-related restrictions in coming quarters. Zee Music Company subscriber base on YouTube grew to 80 million, and it continues to be number 2 music channel. Now coming to the financial performance. Total revenue for Q3 grew 7% sequentially to rupees 21,126 million. For 9 months ended December 21, total revenue came in at 58,664 million, grew 12.5% over last year's same period on a normalized basis for the one-time large content syndication deal in Q3 of last year. Ad revenues grew by 16% quarter-on-quarter. However, on a Y-on-Y basis, ad sales were lower by 3% due to the higher base impact. Q3 of last year had pent-up demand from H1. For 9 months ended December 21, ad sales grew at 24.8% to rupees 32,767 million. Subscription revenue for the quarter stands at rupees 7,902 million and rupees 23,917 million for 9 months ended December 21. This is marginally lower from last year. Pricing embargo continues to put pressure on subscription revenue growth. The investments in our core business this fiscal reflects on our margins in the short term. I would like to highlight that this is in correlation to the overall content strategy across digital and key markets in linear. As a result, operating costs increased by 13% quarter-on-quarter and 8% Y-on-Y. The EBITDA for the quarter came in at 4,793 million with a margin of 22.7%. EBITDA for 9 months ended December 21 came in at rupees 12,355 million, grew 5.5% year-on-year. PAT for 9 months came in at PAT for 9 months in FY22 came in at 7,738 million. This is a growth of 70.8% over last year's same period. For the quarter, PAT came in at rupees 2,990 million, up 12.3% sequentially and down 9.5% from Q3 last year. The cash and treasury investments of the company as on December 21, rupees 15.6 billion. The cash and treasury investments include bank balance of rupees 7.2 billion, fixed deposits of rupees 3.5 billion, mutual fund investment of rupees 4.5 billion, and NCDs worth 383 million. Back to you, Narayan.
Thank you, Rohit. We will now proceed to the Q&A session. I will request moderator to take the discussion forward.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking your question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on your content investment strategy for FY23. So when I see FMCG companies' results in Q3 and in terms of outlook, say the next 2 quarters, clearly they are facing extremely high gross margin pressure plus volume slowdown in rural areas. And if you see the kind of ad spends cuts almost all the FMCG companies have seen, that's extremely high. And next 2 quarters it may not change because commodity inflation remains high as of now also. And then when I see your market share in Hindi, where there is some improvement, but there is still share loss in Marathi and Tamil, which is yet to be addressed. So my question is on the TV content strategy, not on the OTT. Would you make it a bit lower in terms of aggression in the near term, next 2-3 quarters, given these issues? If FMCG companies are cutting down, is this the right time to go aggressive on content in the TV in some of your channels?
So, Avnish, thank you for that. I think you're rightly pointing out what the market dynamics are. But given the fact that our business has generally a lag effect from getting viewership to monetization, and we do believe that the advertising will come back. It may be a lag of a quarter or 2. Therefore, at this point in time, at this critical point of our life cycle, for us to pull back on investments from the linear side would not be wise and not part of our strategy. So we would continue to make those investments, especially on the key markets that you pointed out on, whether it be Hindi, Marathi or Tamil. So that will remain as per our plans.
And could you elaborate what has worked in Hindi but Marathi and Tamil continue to remain WIP? So is it that in Marathi and Tamil the competition is doing more of movies and the reality shows? So you would need to that remains an issue. So it will take more time, Marathi and Tamil market share.
So Avnish, if you look at the kind of business we are in, we've seen this happen multiple times, right? In Marathi, for example, even back in 2010, 2011, we lost share. And it generally takes anywhere between a year to year and a half to fight back, because we are talking about changing habits of consumers. While some of the shows in Marathi have worked and some have not, but that's part and parcel of the game. In terms of Tamil has a different issue, where the early success that we got was on the basis of younger audiences, etc. And we are now addressing these concerns market by market. There's no one size fits all, so we need to find solutions which are unique to each market, which we have found and we are working towards.
Sure. My second question is on the broader construct of the industry. So we are hearing that 12,000 crore kind of investment can come in Viacom 18 by Uday and James Murdoch, etc. So from a two-horse race, does it become now a three-horse race in both general entertainment and sports?
Yeah, definitely, competition has always been good for the consumer, and therefore it is good for the industry. It only helps us sharpen our focus on how do we target our consumers. So we have always welcomed competition. It will only make us more agile and make us more focused. But yes, you're right. While they are present in the entertainment space, certainly what we hear, and this is all conjecture, we don't have confirmed reports anyway, but that they will be looking at sports strategy very well.
Sure, that's very helpful. That's all from my side. Thank you.
Thank you, Amish.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, continuing with the content investment there, I see that the inventories have also, in the balance sheet, the inventories have also increased on a Q-on-Q basis. If you could help clarify whether these are, incremental investments that we have done, or probably some bit of, movie-led content which could not be released and hence, an increase there.
Yeah, good.
So, this is actually a combination of both. If you really see over the last 3 years, our inventory, including all the advances, stood at about 64 billion, and the total increase in the last 2 years is about 500 crores. And so yes, it is appearing more in this quarter because a lot of movies, etc., which were under production, have got delivered, and because now cinemas have, they were shut for because of COVID-related reasons. These were not released, and as these get released in the coming quarters, some amount of release in inventory will be there. Having said that, we are having a very constant watch on the inventory, and our endeavor is to keep the inventory at the same levels, and we continue to add inventory as we amortize during the quarter.
Sure. Secondly, on the advertisement, revenue front, when I take your point in terms of, the higher base on the last year's basis, but even if from a 2-year CAGR basis, we are still up, only 2% there. Your thoughts in terms of, whether this is largely, a function of lower ad spend at the industry side, or there is a significant cut in the ad yields given the market share loss that we have seen over the last few quarters there?
Yeah, so it's a combination of the two. It's a combination of the fact that there has been advertiser spends cut that we have seen. Given that it was a Q3 festive season, we did not see cuts in yields significantly. But also the second function is the fact that some of the key markets, we have had viewership issues, and that has also resulted in a lower ad growth for us.
So, Puneet, will it be right to say that, presuming that it may take, a couple of quarters for us to regain there on the market share side, the ad revenue growth, maybe a double-digit ad revenue growth for us, will be more back-ended in FY23?
No, very difficult to predict that given the current COVID situation, Ankur, but the fact of the matter, I can tell you this much, is that our market share gains have already started, and therefore the possibility of us to get advertising growth back on track should be sooner, provided there are no COVID-related issues that are faced. And I'm pretty confident that on the back of the market share gains, as usual, we will again deliver industry beating growth in the future.
Sure. And just lastly, on the margins front, given the accelerated content investments that we have been seeing, over the last couple of quarters and plus the adverse macro here, will it be fair to say that FY22 will be a base case here and probably things will improve? And, secondly, commensurate to that, your comment on Z5 losses. When should we see, that number getting, the losses, the EBITDA losses number tapering off going ahead?
Again, very difficult for me to predict, Ankur, but the fact of the matter is that margins should start improving, save for any COVID-related issues that the industry may face or we may face. I think our investments in the content side are almost at the peak level. There is only going to be some marginal growth beyond this, if at all. But the revenue makeup on that in the coming year should more than cover that. On the Z5 side, it will remain in investment mode, as I said, even in the earlier quarters, that another 2 to 3 years we will be in investment mode in this business. But yeah, let's look at it more when we have the fourth quarter closed and give you more granular outlook at that point in time.
So just on Z5, Puneet, a follow-up. The quarterly, let's say if I do a total cost, and I presume the marketing will be also a slightly higher spend here. We are looking at a roughly 320 crore quarterly, cost run rate here versus 270, 280, maybe 290 crores last year. So this number should remain as it is going ahead, given these will be, peak content investments and marketing may also be, relatively on the higher side. So delta on the revenue side will drive the EBITDA losses down.
I think you're right on the marketing side, but on the content side, you will see some increase there because, again, due to the pandemic and the COVID situation, we could not release all the content that we had planned for current fiscal year. We have had to move shows into the next year, so there may be some marginal increase there as well. But the marketing side, you're right on that.
Okay, great. Thanks, Puneet. That's helpful, and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Arun Prasad from Spark Capital. Please go ahead.
Yeah, thank you for the opportunity. Puneet, my question is on the OTT side. I see that the daily active user is kind of stable in last couple of quarters. I'm sure you would like that number to grow in a much higher rate sequentially. But my question is specifically, according to your own assessment or judgment, what kind of a scale that you would like to see in Z5 in terms of daily active user, which will make this platform self-sufficient in terms of a good ad revenue and also a good mix of ad and subscription revenue in the near future, and what is that you would want to do differently? And second question is, to achieve that scale, if sports is the only answer, can't we do with the exist? We have already a huge investments in Z5. Can't we do things in a slightly different manner rather than throwing more money in the sports category and trying to achieve that scale without probably looking at a margin accretive returns? These are my questions.
So on the first question, Arun, that what is the MAU to DAU ratio? Generally, the trend we have seen globally is that it's between about 15% is a good conversion rate from a monthly to a daily active user. But what is the optimum level for Z5 to become self-sustaining? That is still the jury is out, because there is no model that predicts that today anywhere, right? So I think that jury is still out. We have to still wait and watch how we can improve on those things. Having said that, on your second question, I do not believe that sports is the only way to grow the OTT business. Sports is certainly a faster way to grow it, but can it not be done without sports? Certainly it can be, and we can. Until now, we have factored in no sports in our OTT business, and that's how we have projected all our plans, even as we speak. So, no sports is factored into our OTT business plan currently.
Okay. So on little bit on the first question, if I can just understand, if internally there is any, have you visited a plan or revisited a plan in which to make the platform more towards an ad, because we have a lot of content. We don't need to necessarily show an original content. We have a lot of user base, a good brand name. What is stopping you to getting into this? Because we have 500 million smartphones in the country. We don't need to only cater to one kind of an audience. You have content for every type of audience. So what is stopping you today from going full-fledged award, like one of the major award player in India has shown the way to do that? So what is exactly stopping Z from taking a different avatar and monetize the existing content?
Arun, unlike the linear business, the technology investment is a large investment. Plus, it's more time-consuming to create and build that technology, the background and the platform. Unlike a linear business where you can switch on the transponder one day and start a channel. So here we have been building the technology, the tech platform from when we launched 3 years back to where we've come. It's a huge journey of improvement. Even this growth of getting 100 million monthly active users is not just by content, it's also by the platform improvements and the user experience improvements we have done. We'll continue to innovate and improve that and reach the plan of being a leading AVOD platform in the country.
Okay, great. Just if I can entertain one more question, having been talking about the deal with Sony in the last 3-4 months, have you had a chance to assess their strengths in this OTT business? How will there be any? Can we see better growth in terms of OTT business? Have you seen any capabilities that you would like to integrate in the future? Any comments on that side, on the integration at the OTT level of these two platforms?
Unfortunately, Arun, I'm not part of the clean team, therefore I'm not privy to any of the data of the competitors. And he is a competitor of ours currently, and therefore I cannot comment or give any color on that as we speak.
Fair enough. Thank you very much. All the best.
Thank you.
Thank you. The next question is from the line of Vivek Anand S from Ambit. Please go ahead.
Hi, thank you very much for the opportunity. On page 5 of your earnings update, you have showcased TV reach and impressions. So reach appears to be growing, but impressions are declining. Why is that so? And the second question is an extension of what Ankur and a few others had asked. On the TV business, even if we adjust for the base quarter having syndication income, it's only a 3% growth. But when we look at, let's say, TV18 entertainment revenues, they have grown at 16%. So what is causing this divergence of our growth versus, say, another player which has reported? Thank you.
If you look at the explanation given there, Vivek, it is clear that the total TV viewership is reduced, both reach and impressions, on account of the movies business on the linear side, given the fact that there has not been too many fresh movies released for the last 2 years. There has been definitely an impact of viewership there. It has also got to do with the fact that you had a one-off Cricket World Cup that happened in this quarter that impacts movie viewership directly. So that is the answer to your first question. Can you repeat your second question? I missed.
So my second question is on the divergence of our revenue growth versus, say, TV18, which reports entertainment revenues. They have managed a 16% growth during the quarter.
Yes. So one, as Rohit explained, and I've given my speech also, that there is a base effect of last year where the industry de-grew 5%, but we still grew 3%. So that is one impact. Second, also, I just spoke a little bit earlier that because we have just started gaining momentum in viewership, the lag effect of monetizing of that is there. And certain markets are yet to improve where Others have grown higher than us.
Okay, fair enough. And just to understand the answer to the first question better, you're saying that because new movies aren't getting released, enough new movies aren't getting released on TV, viewership in the movie genre is reducing, is it? And related question is, this data that you have presented is for impressions in the entertainment category only, right? Doesn't include sports, right?
You're correct, Marat. Just one second, we'll check that. But your first part is correct. That's certainly because of lack of fresh content on the movie channels in the linear business. There is a reduction. Good.
Okay. Lastly, a bookkeeping question. What would be the receivable position right now from City and Dish TV, and how has the collection been over the last 9 months from these two companies?
Before we move to that, the data represented here is total TV. It's not just entertainment.
Okay. So then the World Cup would not have impacted this, right? Because ideally it should have been higher due to the World Cup, right?
No. Total TV means all TV consumption. So it includes sports.
Okay.
So I'll ask Rohit to take your next question on City and Dish.
So, first of all, we mentioned earlier as well, as far as, our overall debtors is concerned, as you would have seen, we have improvement in our overall debtors position, and we've seen strong collections from Dish. So we had agreed a payment plan with Dish, which involved recovering amounts over a period of time, and the overall outstanding as on March 20 was 5.8 billion. While it came down last year, the outstanding now is considerably lower. We have been receiving current collections, and we have also been receiving the part of the old outstanding. So it has come down to 2.7 billion. So more than 50% of the old outstanding has already come down, and it's in line with the payment plan. City is, we've also mentioned this earlier, it continues to be on a cash and carry model, and we have recognized revenues to the extent of collections, and we continue to do so.
All right. Thank you, and all the best.
Thank you. The next question is from the line of Jinesh Joshi from Prabhuladhar. Please go ahead.
Thanks for the opportunity. Sir, my question is around Z5. If I look at the new launches in this quarter, the figure is 51. But if I look at the past trend, the number has been in the range of about 15 to 20. And this quarter it appears to be significantly higher. So any specific reason which you would like to highlight? And given this high quantum of launches, how do you see the pipeline for next couple of years?
No, it's an aberration, Dinesh, because of the pandemic, all the shows got clubbed together, and it's not all shows. It's a combination of movies, shows, other series, etc., and across languages. So it's an aberration. It's not like every quarter we're going to launch 50 pieces of content. So going forward, we do have a strong pipeline, but I can't comment on the numbers right now.
Sure. And sir, a second question is on the network share. I think in the initial comments, it was highlighted that we launched about 25 new shows in this quarter, and despite that, our network share is down by about 40 basis points. Now, if I look at a previous quarter, we had launched about 30 plus new shows, and that had led to about 70 basis points increase in network share. So this time around, I mean, there is some kind of an anomaly. So if you could just explain that bit to me.
No, I don't think there is an anomaly. It is, as I explained earlier, that because of sports and other this thing, there is a negative impact on the overall growth. If we did not have those 25 plus shows launched, this fall could have been higher. So therefore, net effect is 40 basis points. And we will continue to invest and make sure that we continue to grow our market shares.
Okay, but I was just trying to understand the fall in advertisement revenue as well, because on a YY basis, we are down by 3% despite launching new shows. I understand that you spoke of a base effect in the initial comment, but ideally these new shows should have resulted in some kind of a gain and some kind of a growth on the advertisement piece. So I was just trying to correlate these things.
No, Jinesh, unfortunately, in our business, we don't, the lag effect of 13 weeks applies, because it's not as if you launch the show and on day one itself you start monetizing. Once the ratings start coming out, there is generally a lag effect of 10 to 13 weeks that the advertiser looks for, because that's how they consider stable ratings. That's generally the trading practice that we follow.
Sure, sir. No problem. Actually, in the last quarter, it did not play out that way, and we saw an increase, and hence I was a bit confused. But nonetheless, I take your point. Thank you so much.
It's not correlatable, just like to like, so that's
Yeah.
Anyway, to understand it more, you can take it offline with Narayan.
Thank you. The next question is from the line of Kshitij Saraf from Tusk Investments. Please go ahead.
Hi, thank you for taking my question. It's on
sorry to
Z5.
interrupt you, Mr. Saraf. May I request you to come on the handset mode, sir? You are on speaker and it's not very clear.
Yeah, sorry. Thank you for taking my question. It's on Z5. So we see that the engagement has increased, and just wanted to know the plan for increasing the engagement. So
this call is now being recorded.
Any other
call recording has now ended.
Elements planned, for example, be it gaming, be it live commerce, where are we there, and what's our strategy overall for the app?
Sorry, Kshitij, you had some disturbance in the middle. Can you repeat the question?
Yeah. It's on Z5. So what are the elements that we are planning to add? So we've seen some mention of live commerce, some mention of gaming as well. So as we see that the engagement has increased, what's the plan to keep the engagement levels going and increase in future?
Well, certainly we are exploring avenues for keeping more engagement and increasing more engagement, but by adding other kinds of entertainment products, etc. So we are experimenting with gaming, and we will continue to do that in the future as well. Commerce is something that we are still studying and working on. It's not something that we have finalized and are launching in the near future. But certainly through gaming, through music, through other services, potentially even UGC-based content, we are looking at keeping the engagement on the increasing side.
Okay, got it. And for Z as a whole, we have a linear business and we have a digital, which is primarily OTT. Do you see any other sort of large areas that you'd like to get into? So, for example, do you plan to get into gaming, for an example, in a big way, or are there any other areas that you're targeting, possibly in the future, or you're interested in?
Nothing that I can talk of right now, Kshitij. We have currently got our hands full with the linear business and the OTT business. So we are focusing on that, and opportunities will keep coming, and we'll keep exploring them as time goes by.
All right. Thank you so much.
Thank you. The next question is from the line of Yogesh Kirvi from B&K Securities. Please go ahead.
Yeah, hi. Thanks a lot for the opportunity. So my question is related to the domestic subscription revenue. So it was down about 3% on YOY basis. Now I'm sure within this the Z5 related subscription revenues would have only grown. So what is affecting the television subscription revenues? So I understand it's not growing because of NTO 2.0, but it appears that there has been some decline. So if you can just shed light on that.
Yes, we can. So what we have seen and witnessed that in the last 12 months to 15 months, the pay TV market has seen an erosion of 4.6 million households which have moved from pay TV to free-to-air services, and this is largely caused due to the pandemic situation, and that's the reason for the degrowth we have seen in the subscription line.
Okay. And has the trend sort of improved over the last couple of quarters because the pandemic, at least the peak of the pandemic seems to be fallen behind?
No, it has been a steady state degrowth. It's not like it's happened in one quarter or anything. It's happening over a period of time.
Okay. My second question is related to sports business. So we have evinced interest in getting exposure in the recent quarters. So what sort of an ambitions we have? So in the past we had a sports business where we did not had the big ticket rights, but still had a good bouquet of rights across, especially cricket from the foreign boards. So is that kind of an exposure that we'll be happy with, or we are looking at a more aggressive sort of an expansion or the investment this time?
Umesh, we are evaluating all options right now. I cannot say that we have committed to anything in specific, but we are evaluating all options for the future of the business. All I can say is certainly with the addition of the revenue stream from digital, sports does become a lucrative business to again explore. So let's see, we are working on those plans and we'll come back to you at the appropriate time.
Okay. And finally, related to the movie business, so any sense of what kind of investments that we would be looking at, any guidance or any sort of a ballpark over there?
So, I mean, we have been making investments, but like I said, the investments in movie business will continue. We have a sizable slate, and once the whole theater situation improves, we'll be releasing a number of movies in the coming months and quarters, and we'll continue to invest. But if your question is that will it increase a huge amount of inventory, it will not.
Sure, fair enough. Thanks a lot for the responses and wish you all the best.
Thank you. The next question is from the line of Harshit Toshniwal from Premji Invest. Please go.
Hi, am I audible?
Yes.
Yes, sir.
Okay, yeah. Hi. Firstly, congratulations on the great insight. The numbers are very impressive. So, Puneet, two things. One, when we look at the traditional business, and when we look at the revenue decline, right, I compare that the sports.
Sorry to interrupt you, Harshit. Your voice is breaking up, sir. If you can move to a better reception area and ask your question, please.
Yeah, is it better now?
At the moment, it is. Thank you.
Okay. So, I want to understand that you see that structurally the ad revenue decline in the traditional business is something which is also a part of the weaker numbers when we look at it. And secondly, I mean, clearly just want to understand your strategy in respect to the investment in the content on the digital side and on the traditional side. Because, I mean, clearly you still want to, so is it a strategical choice now that we should spend more on the OTT and OTT related content rather than being very aggressive on the traditional content? Thanks.
Yeah, thank you for that, Harshit. Again, let me clarify that one quarter's revenue is no trajectory to see whether that's going to change how the traditional media or the new mediums are behaving. Having said that, we believe that television will continue to grow in this country, both by reach and therefore by revenue. Digital will also continue to grow as we have noticed during the pandemic, and that is a trend. But certainly as a content company and a content tech company, we have to invest behind both the businesses. And therefore, one is not devoid of the other. We cannot, we will choose our markets which are on priority and accordingly choose to make our investments on both the platforms.
Okay. Okay. And second, on the OTT piece itself, so we have seen, so for example, just taking the Sony strategy, and as you pointed out, that even without having our sports on to be the flagship content, things like Shark Tank or etc., but what we did with the Friends reunion show, so those kind of things actually are based, and that gives a boost to the overall segment itself. Want to understand that what is our thought process with respect to the specialized content going forward, specifically for Zee till the time it gets obviously merged? Because Sony, what we have seen is that so specific shows do create a lot of buzz around that particular OTT channel itself.
Yes, I agree, it does. So what we call our marquee shows, we also have a similar strategy, but I think we are playing a more deep game of catering to a much larger audience base. And therefore you see the numbers where we've crossed 100 million in the last quarter itself. So we want to go deeper into the countries with our OTT content strategy, and we will be doing a combination of marquee shows and mass market shows for attracting viewers.
Okay. Thanks.
Thank you.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. First question on the advertisement mix by sector. Whether you've seen any meaningful changes in last 1 year. It looks like FMCG has cut down its spends due to margin pressure. Are you seeing some other sectors like stepping up? For example, new technology companies, are they becoming big now?
Yeah, we have seen e-commerce companies, we have seen BFSI, and we have seen auto actually increasing over the last couple of quarters. So while FMCG is the largest pie for television, the other sectors are picking up as the economy is improving.
How much has FMCG shrunk? And if you can talk about e-commerce, how big is that now?
So e-commerce generally accounts for almost 50 to 60% of the total advertising spend for television, and all other sectors will range between 6 to 8%.
Okay. You mean FMCG is 50 to 60 and others, even e-commerce is only about 5 6, is it?
Sorry, not e-commerce. It's FMCG, which is 50 to 60%.
Yeah, understood. But like that still remains. FMCG still accounts for that kind of a number and not really gone down much.
No, it's not gone down much. It's just that they have reduced some amount of spending, but in the overall composition, they still remain between 50 to 60%.
Understood. And can you share the subscription revenue outlook for FY23? You mentioned about 4.6 million customers who left the PTV category, gone to FTA. Do you think channel pricing is playing any role, or is it only because of lack of new content during pandemic? And would this loss of subscribers make industry cautious about raising prices even once the embargo is lifted?
So it's difficult to say that right now because it's a function of what you rightly said, lack of fresh content that is already there, and the second part that during the first wave of the pandemic, we actually saw a lot of migration happen from big cities to smaller cities where people went back, and that's how the loss of the subscriber base happened. Whether they'll come back to the pay TV, I'm certain that if we offer quality content, consumers will start migrating back because still this is the cheapest form of entertainment available in this country. So I'm not really worried about the fact that if we raise prices, people will just stop watching pay TV. But of course, we have to be conscious of the fact that we can't suddenly increase pricing by 50%, 100%. We have to take conscious calls of how price increases take place in a country like India.
Mm-hmm. But new content has become available for quite some time now, right? So are you seeing the customers coming back, or those who left are not really coming back?
No, actually, if you look at, you can't really define which customer came back and which customer left, right? So that data is not available with us. But I do certainly believe that as and when television penetration increases, we will see consumers converting to pay TV going forward as well. And keep in mind today, one of the largest consumption sectors apart from GEC or generating entertainment is the movie content. And that's where we've seen the most impact happen during the pandemic, even on viewership. So there is a segment of audiences that consume only films, and those people may be the ones migrating away.
Understood. But just about the revenue outlook from subscription in FY23, what should we expect?
Very difficult to predict, Kunal, given that we are still in a very uncertain environment of when NTO 2.0 will be implemented. If you look at the regulation itself, from the time they they cleared the NTO. We need a 45-day window to actually implement. And we are already on 2nd of February, which means if we have to implement from 1st of April, we must get a clear go-ahead on the NTO 2 by 15th of February. And there is still a lot of uncertainty. And as I've maintained that we will see disruption for a quarter or maybe a little bit more than a quarter before we can start seeing steady growth coming in. So again, give us till quarter 4. We'll be able to give you a much sharper guidance.
Okay, no, understood. Thank you. That's it from my side.
Thank you.
Thank you. Question is from the line of Manish Poddar from Nippon India AIF. Please go ahead.
Yeah. Hi, sir. Thanks for doing the call. So, probably 3 questions. So, this largely related to the V5. So, roughly this 10 crore MAU, and of that 3.5 crores is international. So, our scale-up in global has been really, good. What is really the hindrance to actually grow in the hinterland of India?
Sorry, we can't understand anything you're saying, Manish. You're coming garbled.
Yeah, am I audible now?
Yeah, just speak a little slow.
Sure. So I'm just trying to understand, let's say our total MAU is roughly 10 crore users on Z5.
Right.
And if I look at, let's say, the international piece or the global piece, that number is roughly around 3.5 crores. So I'm just trying to understand, the scale up, let's say, in, monthly active users in the international piece is so healthy. What is really the hindrance of scaling this number in the hinterland of India?
Where are you getting this breakup from, Manish, between India and international?
So the presentation says that you have 101.9 MAU, and in slide 23 of the 35 deck, you said global MAU is up about 36 million. Roughly is in Q3FY22 is YOY is up to 36 million.
No. So global MAU, when we talk about, it's a global MAU including India.
Okay, okay.
Over quarter 2 to quarter 3.
Sorry, my bad then. Okay, so just want to get an understanding then, of this base, how much would be global MAU then?
We don't give that split, Manish. That's competitive information.
But would it be, let's say, in double digits now, or it's still?
The lion's share is India. Let me put it that way to you.
Okay. So just in terms of then content strategy, would you have a different content strategy for the international piece, or it's largely cross-subsidizing the same content in the international geography? That is what the approach is there, let's say, for the next 2 years.
Yeah, it's largely that, but we do customize some content for the local geographies also, which are made in those markets or potentially even made in India for those markets.
Okay. That's it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Vivek Anand S. from Ambit. Please go ahead.
Yeah, hi. Thank you for the follow-up opportunity. One question that I had was with respect to the NTO 2.0. I know you tried to answer this question quite a few times, but now that the broadcasters have decided to keep their flagship channel outside the package or bouquet, how are you going to convince all the households to separately subscribe to the flanking channel? I mean, this is not just a Z question, it's more an industry issue because all broadcasters have come together for this, right?
So the fact of the matter is that no household is buying broadcaster bouquets. They buy the bouquets created by DPOs. Even today, right? No, I mean, there are very few households, which will be single digits, who actually do a la carte picks and buy their bouquets. In majority, maybe 95% of the cases, it's the DPO's bouquet that gets bought. And I don't see that changing going forward just because we have changed our bouquet. The consumer practice will change. So it will still be the DPOs that will create the bouquets, and the industry should not have anything there. But yes, the pricing for the consumer will certainly go up.
All right. Okay, thanks.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Narayan for closing comments.
Thank you everyone for your time today. Should you have any further queries, feel free to reach out to us. Thank you again. Please take good care of yourself. Thank you.
Thank you. On behalf of Zee Entertainment Enterprises Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.